Well, I mean, you can look around you and you can look at other currencies. Gold reached all-time highs in the second and third largest economies in the world recently in China and Japan. And when you talk about Japan, gold has appreciated by 50% against the yen this year. You can, if you're looking a little further, you can see it's up tenfold in Turkish lira and tenfold in Turkish lira and fivefold, I believe, in the Argentine peso. So you have gold performing very, very well around the world. And that, if you're paying a little bit of attention, you understand that.
Japan, not traditionally a major gold importer, has recently seen a surge in demand from investors and households, driving the price to a record high of 300,000 yen, significantly surpassing the 30-year average of just under 100,000 yen. Japan's gold rush has been triggered primarily by the yen's historic slide against the US dollar, prompting investors to seek a hedge against inflation. AndySchectman is a distinguished authority in the realm of precious metals, serving as the founder and CEO of Miles Franklin. In this video, AndySchectman underscores the global rise in gold prices, notably in China, Turkey, Argentina, and Japan, with a 50% surge against the yen this year. Gold prices are solidly higher and hit daily highs in early U.S. trading Tuesday, following a key U.S. inflation report that came in slightly tamer than market expectations. Silver prices are also up. Short covering in the futures markets is featured in both precious metals markets, along with some perceived bargain hunting in the cash markets. Andy suggests recognizing the dollar's true value while highlighting risk in holding dollar and the benefits of investing in gold and silver. In an unexpected turn of events, the US dollar has depreciated against a basket of currencies following a softer than expected US October Consumer Price Index (CPI) report. Furthermore, he voiced worry about the status of the world's reserve currency, indicating it is teetering on the edge of losing its AAA rating. Now we present the clips of AndySchectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Everywhere else in the world, people understand the significance of gold and of de-dollarization. The U.S. is blinded to it because of the inordinate strength of a currency that's 165 trillion in debt, and a country that is not unified, and a country that has only 5 trillion in assets, the largest being student debt. We don't deserve to have the currency as strong as it is based upon economics and mathematics. Sure, we got the smoothest working exchanges and the most liquid bond market. Yeah, all that stuff. Great. That's the recency bias that will all blow up in people's face when the switch is flipped. But they're not going to switch it until the time is right. And those charts, Chris, which are fantastic, you're always prepared, exemplify it. The world understands what gold is. The people in this country don't. That's the shame of it. And when I say gold, I mean silver too. But people around the world understand the dangers of being in dollars and the benefits of being in gold. And that chart says since 2000. I mean, look at that chart. Since 2000, it's just gone straight up at a 45-degree angle. And draw a line from there. And where does it go now? I mean, if you were to draw a line like the technical analysts do, that chart goes way the hell off the chart, way above your head on this picture here. And you're talking, what, 4,000, 5,000? I don't know. But a technical analyst would draw the charts from peak to trough and trough to peak, or however the hell they do it. And you can see what I'm saying. I know you know what I'm saying. The price goes a whole lot higher. So I think the problem people make is assuming that it's gold going higher. It's not. It's the value of the dollar that we measure it against. And when the dollar finally recalibrates to a fair value based upon another country or group of countries and their endeavors to, no longer use the dollar for settlement in many things, I think you'll see the dollar start to lose value. And when that happens, gold and silver will go higher in the face of a falling dollar. It's not that gold and silver are going higher, it's that the currencies, except for the dollar, are falling in value. And people think the dollar's strength is justified at almost 100, about 125% debt to GDP, and all the problems we see around us, and this growing union of countries pushing back against the West. Then don't buy metals. But if you think this is a trend that has not fully expressed itself yet, then what the hell are you waiting for? Well, I mean, you can look around you and you can look at other currencies. Gold reached all-time highs in the second and third largest economies in the world recently in China and Japan. And when you talk about Japan, gold is appreciated by 50% against the yen this year. You can, if you're looking a little further, you can see it's up tenfold in Turkish lira and fivefold, I believe, in the Argentine peso. So you have gold performing very, very well around the world. And that, if you're paying a little bit of attention, you understand that. But I think really more than anything, what you're seeing is, as an example, think about this. The world reserve currency is close to losing its AAA status. You got the rating agencies downgrading U.S. debt. You have so much divisiveness in this country, where I think people are just uncomfortable.
Despite an increase in gold demand, Schectman assures that the appetite for silver remains robust. Gold and silver have both struggled to hold onto any gains, following gold's notable 7% increase in October and silver's modest 3% rise. Gold's upward trajectory last month was primarily attributed to the surge in demand for safe haven assets, prompted by the escalation of the Middle East conflict, leading investors to shift away from riskier investments. He highlights BRICS Pay as a game changer, diminishing their reliance on the US dollar and the SWIFT system. The deployment of blockchain-powered mechanisms such as BRICS Pay, alongside the escalating adoption of China's digital yuan, reflects a concerted effort to transition into a digitalized economic industry. According to recent news, the American dollar has surpassed the Russian ruble in the foreign exchange market. The event is not trivial, given that Russia has been subjected to Western sanctions for over a year in connection with its invasion of Ukraine. Let's get back to the interview.
So this year, we've seen an increase in gold sales, but it hasn't really affected the amount of silver sales. In fact, the people who understand what's happening, the people who have paid a little bit of attention or a lot of attention, understand that silver is the place to be. The people who have come in lately, who have never thought about buying metals before, their motivation is of protection and of safety, and of hedging against the chaos. So silver is somewhat removed their line of sight. Of course, we have that discussion, but it just seems to me that a lot of people are looking to gold right now as a first entry into the industry. Maybe they don't understand the reasons that we do to buy silver, but they look at gold as an asset that would be used to help, extricate them from the system, from the matrix. And I guess it takes a little bit more of, I don't want to say sophistication, but following this industry and the reasons to buy silver, because let's face it, you're more the news when it comes to silver than anything we see on the mainstream. The mainstream wouldn't know a silver coin if it fell on their foot. And when the mainstream talks about anything metals related, it will typically be gold. And so the newbie who might be very financially literate in terms of mainstream financial applications is completely a dunce when it comes to the reasons to buy silver. So that's where education and good old-fashioned talking comes into play. The demand for silver is as strong as it's ever been. We didn't really have a lot of newbies coming into the industry. The people that came in over the last couple of years, you could argue, were a byproduct of silver squeeze and of a growing chorus of hard money people. But what we've seen since the bank failures and the increased chaos around the globe, here in the States too, are people who are just flat out scared, just giving in, I guess you could say, to leaving their comfort zone. And that would be of stocks, bonds, and real estate. And the first place that they would go would be gold. We're seeing more gold than we have in the last few years, but the demand for silver has not waned at all. We just learned that a new mechanism, a new financial settlement platform was just released, and it's called BRICS Pay. And it's a blockchain-based payment system, a distributed ledger. And it's designed so that any of the BRICS member currencies can be used right now to trade in local currencies. At the end of the BRICS meeting, they said, listen, we want to go back to the drawing board. We're tasking the financial the finance ministers of these countries to go back to the drawing board, come back to the meeting next August in Russia and give us your findings. In the meantime, let's all trade in our local currencies. So if Brazil wants to sell corn to China, they can receive yuan for it. the amount of soybeans sold by US farmers is down huge amount this year, like 60%, because Brazil is selling China all of their soybeans in yuan. All of these things used to settle in dollars and now they're not. But this new BRICS pay system enables trade and financial transactions between these BRICS countries, and it bypasses the US dollar or the euro and reduces all of the dependency on the SWIFT system or any of the Western financial systems. And you got countries like Russia and Iran who have already been disconnected from SWIFT, had their assets frozen and or confiscated. And there are other countries like China where you see these very veiled threats to do it to them too. So this has created this urgency to bring up this new alternative system. So BRICS pay is effectively the beginning of the end of the SWIFT system for these countries.
The acceleration in gold prices, driven by currency uncertainties and technological shifts, challenges the traditional dominance of the US dollar. There's an ultimate urgency in adopting BRICS currency, predicting a shift away from the established Western financial structures. What role do you see for gold and silver in the evolving global economy? And what factors do you think will shape their future in the years ahead? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.